What if buying a house isn't automatically the smartest financial move? We're told from a young age, rent is throwing money away. Build equity. Own something. It sounds responsible, mature, logical. But here's the uncomfortable truth. Owning a home also includes large amounts of money you'll never see again. Interest, property taxes, insurance, maintenance, repairs, closing costs. In the early years of a mortgage, the majority of your payment goes to the bank, not into equity. That $3,000 monthly payment? A big portion is interest. Gone. So no, you're not fully paying yourself. You're paying for housing, just in a different format. The hidden math most people skip. There's one simple metric that cuts through emotion: price to rent ratio. Take the home price and divide it by annual rent for a similar property. For example, a $600,000 home that rents for $24,000 per year. $600,000 divided by $24,000 equals 25. Historically, below 15 implies buying often makes financial sense. Between 15 to 20 depends on other factors. Above 20, renting frequently wins on pure math. In many major cities today, ratios sit above 25. That means you're paying a premium to own, not necessarily because it builds more wealth, but because ownership is culturally expected. The down payment trade-off. Now think about the down payment. Let's say you put down $100,000. That money is now locked inside a property. It's not diversified. It's not liquid. It's tied to one neighborhood, one market, one asset. Could it grow through home appreciation? Yes. But invested in a diversified portfolio, historically earning 7 to 10% annually, it could compound aggressively over time. The key word is opportunity cost. What could that capital be doing instead? Ownership isn't fixed cost. It's variable risk. Rent is predictable. Home ownership is not. Roof replacement, HVAC failure, rising insurance premiums, property tax increases. These aren't rare events. They're inevitable over long time periods, and they're rarely included in people's mortgage math. Ownership carries volatility, just in a slower, less visible way. Flexibility is financial power. Renters can relocate in 30 days. Homeowners must consider agent commissions, closing costs, market timing, liquidity risk. Selling a house can cost 6 to 10% of the property value. That friction matters. In a fast-changing economy, flexibility has real value. Renting buys optionality, and optionality reduces risk. But rent always goes up? Yes, rent increases over time, but so do property taxes, maintenance costs, insurance premiums, HOA fees. Ownership doesn't eliminate inflation. It just changes how you experience it. If a renter invests the difference between rent and ownership costs consistently, over decades that discipline can outpace home equity growth. But here's the key. Renting only works as a wealth strategy if you invest the difference. If you simply spend the savings, ownership may win by default. Discipline is the deciding factor. When buying absolutely makes sense. Buying can be a great decision if you plan to stay long-term. The price-to-rent ratio supports ownership. You value stability and customization. You can comfortably afford all costs. You understand the trade-offs. The mistake isn't buying. The mistake is buying automatically. Because that's what adults do. Because everyone says it's smart. Because it feels safer. Tradition is not a financial model. The real wealth equation. A primary residence is a lifestyle asset. It provides shelter, stability, and emotional satisfaction. But wealth is built through productive assets. Assets that generate income. Assets that compound. Assets that scale beyond your time. A house can appreciate, but it doesn't pay you monthly cash flow unless you structure it that way. Don't confuse pride of ownership with financial optimization. Run the numbers. Calculate the ratio. Estimate total ownership costs. Compare realistic investment returns. If renting wins, rent confidently. If buying wins, buy strategically. Just don't follow the script without auditing the math. Because the most expensive financial decisions are the ones we make out of habit, not analysis. Subscribe to Warren Finance for simple, visual breakdowns that question assumptions and focus on what actually builds long-term capability.